Should you be using accrual or cash basis accounting in your agency? What's up, everybody? My name is Chris Hervishon. The website is betterwaycpa.com, and let's dive into it. So what is accrual accounting? It records the transactions when they occur. What is cash accounting? It records the transactions when cash changes hands. Now, what's the difference? So think of it this way. Under an accrual basis of accounting, let's just say you're going to go ahead and design a website for a client. The client pays you $30,000 on the first of the month, and then you are going to deliver that website evenly over 5 months, just for argument's sake. Well, you would take the revenue onto your books in $6,000 increments over the course of those 5 months. So as you earn that revenue, as you complete that project, that $30,000 is then going to become revenue as opposed to a liability. The reason why it's a liability at the start is because the client gave you $30,000. Theoretically, the next day you've done zero work, the client can demand that back, so it's a liability. You have to perform the work in order to get the revenue and in order to be able to keep the cash. Cash accounting, totally different. Day one, you sign that agreement for that $30,000 website. The client gives you $30,000, you record $30,000 as revenue. Two totally different things. So what accrual accounting does is it matches your revenue and your expenses, because the same thing can happen on the expense side with when they occur, when the economic activity has actually occurred, and then cash, it's basically cash changes hands, either it's going in or coming out, that's when the transaction is recorded. So the benefits of accrual accounting: more accurate financial picture. You are the way that your books are being kept. It's again based on the economic transactions that are happening, and so look, we had $6,000 of income. We now have $24,000 of liability. As you go along, what your actual financial picture looks like, not just whether or not cash is exchanged hands. The same thing can happen is if you do work for a client, you send them an invoice. You've got a receivable, you've got the revenue, it's already happened, you've done the work, but you don't have any cash, so you don't have any revenue. So it kind of makes your books look a little bit wonky. Number two, it's easier to forecast cash flow because you've already identified the transactions. If you know the expenses that you've already incurred that you haven't paid, then you know that there's cash due from you at some point in the future. Likewise, if you've done the work, and your client owes you money, you know that there's cash that's going to be coming in the future. It makes it you've already identified these transactions. It makes it very easy for you to be able to forecast cash flow from that perspective. Taking that a step further, if you know that XYZ client usually pays within 14 days, you can forecast that that cash should be received in 14 days. If you know that you've incurred an expense, maybe from like an influencer or some sort of a contractor that's done work from you, and you know that you're going to receive that invoice on the 1st of the next month, and it's going to be due by the 5th, well, you know that you need to forecast cash to go out of your business somewhere between the 1st and the 5th, right? It makes it easier to forecast cash flow. You've already identified these transactions because you've booked them in your financial software, and you don't have to go and try to recreate the wheel just to do a cash flow forecast. And then number three, it's easier to benchmark. Many agencies are on accrual-based accounting, so when we look at the benchmarking data, it's over generally long periods of time. It's over the course of a year, it's over the course of 5 years, something like that. It makes it easier to do an apples-to-apples comparison. If you are at the end of a period and you're trying to benchmark yourself against your competitors, but there's these huge transactions that are sitting out there where there's no cash that's been exchanged, and you're on a cash basis system, it's not going to be apples to apples, right? Simple enough. So drawbacks of accrual accounting: it's more complicated. So as I've laid it out in the last couple of minutes, you can probably gather there's more work that goes into it. You need to be identifying these transactions as they occur. You need some sort of a system to be able to identify. You need some sort of a system where the folks who are working in your agency are identifying transactions that they are aware of and telling the accounting team or the accountant that you have that they are hanging out there. So it's just more, it's more complicated. It's more work. The second bullet point here says requires more time. You need process to identify those expenses. That's exactly what I just said. And then number three, there's less automation. If you think about this within the context of using QuickBooks Online, you hook up your bank account, you hook up your credit card, you've got a bank feed where the transactions just come in as they occur, and you classify them, and then you're done. You classify all of them. There's nothing left to do. You've classified all your transactions. You're done. That's basically the cash basis of accounting. With accrual accounting, you can't do that. So if you've got a $5,000 Mac laptop that is a fixed asset that you're going to be depreciating over time, you're not going to be able to just run that through the bank feed. If there's significant transactions where you need to pay contractors or influencers, they've already done the work for you, you owe them the money, you can't just run that through the bank feed. It's going to happen some point in the future when the cash exchanges hands, then you can run it through the bank feed. But from a cash flow forecasting perspective and from the accuracy of your financials, it doesn't help you. So when do you absolutely need to use accrual accounting? It may not be your option whether or not you want to use cash or accrual. Number one, you're a publicly traded company. Generally, that is not the agencies that I work with. Generally, you're going to be much larger businesses, multinational type organizations from an agency perspective. That's generally not the agencies that I see. Number two, you're required for tax purposes. So if you are not a small business, and a small business is defined by the IRS as any business that has 25 million in gross receipts or less, or if you have inventory, and if you're an agency, you most likely do not have any sort of inventory, then you would have to do it for tax purposes. Most agencies, you have the option tax or accrual. You can't just switch back and forth, right? And if you're going to switch, you need to tell the IRS, you need to basically apply for it. But that's one area of tax planning where we can look at it and say, hey, it would benefit you now and in the future to switch from accrual to cash or cash to accrual or vice versa. It just depends on how your business operates. When should you use accrual accounting? Number one, if you understand it. That's the biggest piece. If you understand how to use accrual accounting, if you understand what it is, what sort of transactions you need to be identifying, how you need to be identifying them, how you need to be booking those entries into your accounting software, having other people book those entries, then it's an option. If you don't understand it, if you don't want to understand it, if you don't want to hire people who understand it, don't do it. It's just going to create a mess. Number two, you can implement a consistent internal process and automation to support it. There are ways to automate this. That's something that I've worked really hard on in the last few years. I would suggest that you do it too if you're going to implement accrual accounting, especially if you're on a shoestring budget or if you don't have the resources to be able to support all of the different transactions that you're going to have to identify and book. And you need some sort of an consistent internal process in order to do it. You need to have the people working in your agency who are going to help you identify transactions that need to flow to your accounting statements, as opposed to just waiting for them to come through the bank feed. And then finally, you have the financial resources to support it. Generally, you should be a larger type agency, and if you're a larger type agency, why that's important is, number one, you've got the financial resources. So to pay a CPA, to pay an accounting team, to pay a bookkeeper to support accrual-based accounting is going to be more expensive because it is more time consuming, and it is going to require more resources. And if you're a smaller agency, you probably don't hire a full-time year-round CPA or accountant or bookkeeper. That means that you're going to have to do it. That's just one more way that you can be working in your business as opposed to on your business, and that's not what we want. We want you working on your agency as opposed to in your agency. So you should be probably a larger type agency. It doesn't mean you have to be that $25 million agency that I talked about, that the IRS would classify you as a larger business, but it does mean that you should probably be at least several $100,000 in order to support it, in order for it to make sense for your agency. So that about wraps it up, but a couple of final deep thoughts. Number one, it's helpful to know the difference between accrual and cash accounting. So accrual basically just matches up the economic impact of that transaction to when it occurs in your financial system. And then cash is when cash moves, that's when it gets booked in your financial system. Two totally different things. Under accrual basis, it doesn't matter when the cash moves. It matters when the actual transaction has happened. In cash, it matters when the cash moves. Number two, accrual accounting requires more resources, both time and financial. I think I've covered that fairly thoroughly. Accrual accounting is more complicated. There's more to know. There are more transactions that you need to be booking on a fairly consistent basis, and it's not just booking them, it's booking them and reversing them when you close the books. So it's complicated. That's why there are accountants, right? If you're not an expert on accounting, definitely hire an accountant. We want you working on your agency, not in your agency. And then number three, accrual accounting will allow you to have more accurate financial picture on a consistent basis. Totally true. Like I said, when the transaction occurs, that's when it goes into the financial statements. That'll give you a better picture of where you actually are. It'll, like I said earlier too, it'll help you forecast cash much easier because you've already identified the transactions and you already know when you're expecting the cash to go in or come in or go out. All right, so resources for today. The YouTube link, the link to this show will be here in the slides. The slides will be posted out to Google Slides. The marketing agency sample wayfinder, I suggest you take a look at that. If you're interested in what the best practices are for accounting and finance in an agency, if you're interested in where your agency falls relative to the benchmarks of other agencies in your industry, the wayfinder is for you. It's basically a roadmap. It's a plan. It's a plan to implement outsourced accounting, which is the implementation of that plan. Outsourced accounting is a really good option if you need to be an accrual basis on an accrual basis in your financial system, because that's that resource, that one financial resource and also that accounting resource that you need in order to do it successfully. There's an Investopedia article here on accrual accounting, and a really interesting article from the Journal of Accountancy. It's a little bit technical from an accounting perspective, but really for small business tax accounting methods. This is in relation to TICJA, which is the Tax Cuts and Jobs Act, passed at the end of 2017. It talks about how accrual accounting and the need for accrual accounting changed from a tax perspective. There's IRS Publication 538. That's where it lays out exactly who needs to use accrual, who needs to use cash, or can use cash. And then finally, there's a really good article from the Agency Management Institute on why agencies tend to use the accrual method of accounting. As a total aside, the Agency Management Institute also does a really good podcast, so do check that out. And finally, let's connect. Chris@betterwaycpa.com. The phone number 843-608-0298. You can find me on Facebook, LinkedIn, Twitter, Quora, Pinterest, and Instagram. So pretty much everywhere. Thanks for tuning in. If you like this video, if this was helpful, please like it, please share it. Please also subscribe to the YouTube channel. That helps me to get my message out. That helps me to understand what kind of content you want to see and what kind of content I should create in the future that would be most helpful to you. So I would really appreciate that. So please like and share and subscribe. Thanks a lot, and I will see you next time.